NVIDIA has just revealed a $200 billion CPU market forecast that includes China, and mainstream headlines are celebrating a new phase of explosive growth. But if you're only watching the news, you're missing the real trade setup. Pull up the 1-hour chart right now, and it tells an entirely different story. A strong sell signal is flashing on the intraday time frame, even as weekly and monthly charts remain firmly in strong buy territory. This kind of extreme timeframe divergence creates deadly market traps that wipe out retail traders while institutions position for the next big move. Right now, this stock has one critical danger zone and one hidden high probability opportunity. I'm breaking both down in full detail, and I'm giving you 3 exact entry, exit, and stop loss levels you can use immediately to trade NVIDIA like a professional institutional trader. Stick to the end for the complete actionable playbook. Let's start with the immediate market verdict. Here's the plain simple truth. NVIDIA is in a long-term roaring uptrend, but today's intraday bias is a corrective fade. Monthly and weekly timeframes are unambiguous strong buys, no exceptions. Yet the 5-hour chart prints sell pressure, and the 1-hour chart is locked in a full strong sell signal. For today's active trading session, short-term momentum leans lower, targeting nearby liquidity pools. However, any sharp dip into key weekly support territory will trigger aggressive institutional buying. This creates a two-sided, choppy market environment where blindly chasing breakouts or breakdowns will quickly erase your trading account. Memorize these 2 make-or-break levels. First, 220. A decisive 1-hour close above 220 invalidates all short-term bearish pressure, kills the intraday sell signal, and clears the path for a rally toward 225 and higher. Second, 212.14. A clean breakdown below this support zone confirms the downside trap is active, accelerating price toward 206.35 at rapid speed. All price action between 212.14 and 220 is just noise designed to shake out weak retail positions. Now let's dive into the full technical breakdown, mapping from the macro trend down to intraday noise. On weekly and daily timeframes, NVIDIA holds a textbook higher high, higher low bullish structure. The daily trend is currently neutral, meaning the stock is simply digesting its prior massive rally, not reversing it. Long-term moving averages provide rock-solid underlying support. The 200-day MA sits at 183 and is steadily climbing, acting as the primary trend anchor that has absorbed every major dip this year. The 100-day MA rests at 195, and the 50-day MA at 203. With current price at 215.33 trading well above these key long-term averages, the swing and positional trend remains overwhelmingly bullish. The 20-day moving average at 213 is the critical short-term pivot level to watch right now. On the daily chart, the MA20 has served as dynamic support, with price closing marginally above this key level. The real battle is playing out on the 4-hour and 1-hour charts. On the 4-hour timeframe, the 20-period MA is curling lower and dangerously close to a bearish cross under the 50-period MA near 216. A confirmed cross will trigger additional short-term downside pressure. The 1-hour chart paints an even more bearish near-term picture. The 5-period MA at 220 and 10-period MA at 219 sit above current price, with a sequence of lower highs pressing against the 1-hour 20-period MA. 1-hour MACD is firmly in bearish territory. While daily MACD remains positive at 7.75, histogram bars are shrinking fast, signaling exhausted upward momentum and building pullback pressure. Daily RSI sits perfectly neutral at 53.7. No overbought or oversold extremes left on the table, meaning the stock has room to swing sharply in either direction. Let's lock in your key support and resistance levels. Primary support lands at 212.14, a recent swing low and high volume demand zone. Below that, the major structural support is 206.35, aligning closely with the 50-day MA at 203. This entire 203 to 206 zone is a high-priority institutional reload zone for long-term buyers. On the upside, immediate resistance is 225.29, followed by a secondary ceiling at 231.08. A clean break above 231.08 triggers full price discovery and a new bullish breakout leg. Right now, Price is trapped between a downside magnet at 213 and an upside ceiling at 225, with short-term timeframes pushing price lower. This setup creates a predictable liquidity grab. Before any sustained bullish recovery, price will likely dip below 212.14 to shake out weak holders and fill institutional buy orders near daily support. This is the classic divergence playbook. Strong monthly, weekly bull trends paired with intraday sell signals almost always produce a quick shakeout dip before the primary trend resumes. Next, let's pair the technical setup with the fundamental catalyst driving price action. NVIDIA's new $200 billion CPU market forecast, one that explicitly includes China, is a legitimate game-changing long-term catalyst. It confirms NVIDIA's addressable market is no longer limited to GPUs and AI accelerators, expanding deeply into high-growth data center CPU territory. The inclusion of China also signals geopolitical restrictions have not fully closed off a massive revenue stream for the company. Here's the trap most traders fall for. The market already priced in NVIDIA's CPU expansion via its Grace superchip architecture during the recent monthly rally. The new $200 billion figure and China market detail are incremental news, not brand new surprises. Short-term traders are now selling the news, creating a textbook buy the rumor, sell the fact intraday drop. Macro conditions amplify this short-term sell signal. S&P 500 and Nasdaq futures show momentum exhaustion near recent highs, and semiconductor ETF flows have been mixed over the past 24 hours. A mild risk-off tilt across broader markets is compounding. NVIDIA's intraday bearish pressure. The 1 to 2 week longer-term outlook remains cautiously bullish, but only if the 212.14 support zone holds. The $200 billion CPU forecast fundamentally upgrades NVIDIA's long-term growth valuation, so institutions will actively defend the 200 to 206 support zone. The entire bullish thesis is invalidated only by a weekly close below 206.35. A break of that level signals deeper trend damage, shifting the stock into a range-bound or corrective longer-term structure. Now for the most important section, 3 precise, executable trading strategies with exact triggers, stop losses, and profit targets. No guesswork, just institutional-grade setups. Strategy 1. The Sniper, Conservative Trend Alignment. This setup is for low-risk traders who want to follow the dominant weekly bull trend with a high-quality value entry. Wait for a pullback to the 212.50 to 213 demand zone. Specifically, look for the 1-hour RSI to drop to the 35 to 40 range, paired with a bullish pin bar or engulfing candle forming directly on the 212.14 support floor. Only enter on confirmed bullish price action. Never catch falling knives. Place your stop loss at 211.20, just below the key support zone, to invalidate the setup cleanly if the downside shakeout extends toward 206. First profit target is 218, just below the declining 1-hour MA10, delivering a 3-to-1 risk-reward ratio. Second target is 225 at major resistance, pushing total risk-reward near 6:1. Cancel this setup immediately if a 1-hour candle closes below 212.14 without instant recovery. Strategy 2. The Active Trader, Mean Reversion Play. This higher probability setup leverages the daily 20-period moving average at 213 acting as a natural price magnet. Wait for bullish divergence on the 1-hour chart. Price prints a marginally lower low while RSI forms a higher low during tests of the 212.50 to 213 zone. Enter long on the close of a reversal candle above 213.20. Set your stop loss at 211.80, beneath recent intraday wick lows to guard against false breakdowns. First target is 219, near the 1-hour MA20. Once hit, move your stop to break even to eliminate risk. Second target is 224.50, just below major 225.29 resistance. Once price breaks above 220, deploy a 2-point trailing stop to capture additional upside momentum. This setup capitalizes on the reliable snapback move when a strong trend stock tests its daily MA during a healthy pullback. Strategy 3. The Aggressor, Countertrend Intraday Fade. This high-skill setup is exclusively for disciplined risk-managed traders, targeting the 1-hour strong sell momentum. Wait for a failed rally into the 219 to 220 resistance zone. Look for price to spike upward to fill the 1-hour MA20 gap at 220, then print a bearish engulfing candle or long upper wick on the 15-minute chart. Enter short at 219.50 with a tight stop loss at 221.10, just above the 220 trend invalidation level, capping risk at roughly 1.6 points. First profit target is 215, session open level, with a second target at 212.80 just above major support, delivering a 3.5 to 1 risk-reward ratio critical warning. This trade fights the dominant weekly bull trend. Take profits quickly, and never let a winning counter-trend trade turn into a loss. If any 1-hour candle closes above 220, exit the short position instantly. No exceptions. Let's cover non-negotiable risk management rules. Never risk more than 1 to 2% of your trading capital on any single setup. Avoid holding positions through high-impact macro events, including Fed commentary and unexpected tariff news. Always set your stop loss in your trading platform immediately upon entry. Stops are mandatory, not optional. To wrap up, memorize the single most important level for upcoming sessions, 212.14. This line separates a healthy, bullish pullback from a dangerous trend breakdown. As long as daily closing prices hold above 212.14, the $200 billion CPU growth narrative remains intact, and the path to 225 and 231 remains open. A decisive break below this level opens the trapdoor to 206, with a potential retest of far lower long-term moving averages. Tomorrow's key focus is simple. Watch whether the 1-hour chart flips back to bullish momentum, or if selling pressure intensifies. Track the 213 MA20 magnet and semiconductor ETF fund flows for early directional clues if you want full breakdowns of Bitcoin, S&P 500 divergence, and broader market liquidity trends that directly impact tech stocks like NVIDIA. My latest analysis video is live. Now, click the end screen to keep learning. If this script gave you a clear, actionable trading plan for NVIDIA, smash the like button, subscribe, and hit the notification bell. I'll see you in the next video, where we decode institutional market moves before they unfold.